What's up, guys? William Ryan here from Optimal Advance. It is currently 4:33 on Saturday, August the 20th, and today we're going to be looking at taking a paper trade. Okay, I'm not going to be executing this trade. I'm just monitoring price on my day off. So the reason why I'm not taking this trade is because it's against the higher time frame order flow. But this is typically a framework that I would look for if the higher time frame order flow were to be bullish. All right, so we have the run on liquidity here, on the sell side liquidity, and then we have the market structure shift right here. Okay, so this is indicating now that market or that institutional order flow is bullish, right? And here, as you guys can see, we are forming a optimal trade entry. Right, so from this range low to this range high, okay, below equilibrium is right here. And below EQ, what do we have? We have a bullish breaker and this fair value gap. Okay, we have a sell side liquidity pool here that we could run into and then reject. That is personally what I would like to see currently. Obviously, if we trade through this gap with some speed, then we're going to be wrong in our analysis, and that's totally okay. My expectations when I'm trading against higher time frame order flow is not the highest per se. And let's say if I were to take a trade in here, my risk would be cut in half, or maybe even more than that. Right? For me personally, I don't like getting into scalps like this or day trades against the higher time frame order flow. It's just not worth it for me, and the juice is just not worth the squeeze. Right? So if we were to take the current range high to low with the fib, right, we have equilibrium right here. Okay, and what do we have above that? We have a 5-minute gap, right? This is a 1-minute chart, but if you were to go to the 5-minute, the gap looks like this. Okay, but I've refined it to that. You have the ICT bearish order block in here. So this is the objective that I'm looking for. All right, so if price comes down here, takes out these lows, we'll be looking at, like, let's say if you were to take this trade, you'd be looking at, say, 8 pips to 25 pips. So this would be a 3-to-1 trade that you could take, right? If this is your kind of thing, going against the higher time frame order flow. For me, it is not. So we're going to see what happens. We're going to watch this play out. All right, you see how they've primed sell side liquidity here? See these equal lows? Like for me personally, when they leave these like this and there's a fair value gap below the marketplace, I would prefer them to come down, sweep these equal lows, come into the fair value gap, and then start to rally for a premium market. So yeah, guys, I'm just going to let this play out. We'll see how it goes. My expectations are, to be quite honest, really not that high. It's Saturday at 4:38 on the 1-minute chart. I'm just monitoring price and trying to get better, and ultimately trying to bring you guys content and bring you guys more quality trading experiences. So hope you guys are having a great day. Hope you guys are having a good weekend. And I'm just kind of going to go quiet here, and we're just going to watch price together and see how this plays out. What I would like to see is when we do sweep below these lows, these equal lows in here, I want to see it come into this fair value gap and then reject. I don't want to see it spend a whole lot of time in here, right? Because we're looking at a trade against the higher time frame order flow, if we sweep down below these lows in here and come into this fair value gap in this breaker, we're going to want to see price expand. We need to see immediate feedback that our trade idea is correct. Otherwise, we're most likely going to be wrong, right? Because the order flow is bearish on every time frame except for the 1 minute right now. So right, so if we were to look at things from a power of 3 perspective, right, with this framework, we would have consolidation and then manipulation down, taking out the sell side, right, coming into the fair value gap, and then expanding higher. So accumulation, manipulation, distribution to come up into this 5 minute, 1 minute gap, and then the 1 minute bearish order block. The basis for this trade, although the framework that you see here, the liquidity run, market structure shift, and then the fair value gap, right, the ICT 2022 model, right, although the framework is there, the reasoning behind why I sat down at the charts to watch price unfold here was because if you look at the hourly time frame between Bitcoin and Ethereum, we have SMT on the lows. So Bitcoin is failing to take out the low at 20,780, but Ethereum has swept its lows. Okay, Ethereum took out those lows, so there's SMT divergence. That is why I'm looking for price to reprice into a premium market to then maybe continue going short. Right, so that's the basis for the trade, the SMT on the hourly lows, and that is why I'm looking for potential longs back up into a premium to then potentially go short. Right, back up into here, above here. So we're about to enter into our fair value gap now. This is going to be, right, when you're looking at fair value gaps, this is the most important thing, right? You don't want to see price spend a whole lot of time in here. You want to see price give you kind of like an immediate reaction to kind of signal that you are on the right side, right? Especially when we're going against the higher time frame order flow, because if we're really bearish, which I think we are on crypto, on Ethereum and Bitcoin, we could potentially just slide right through this fair value gap. right? And then look to target these lows in here. This is also why I'm not taking the trade live or on demo. We're just looking at it from a paper trading perspective and gathering data and feedback on the marketplace. So in here, this is where we would want to see like a swing low form, right? We want to see a swing low form to give us some confluence that we are going to be right. Right? If we trade through this fair value gap, then we're most likely going to be wrong, and price is going to come below this low. Just going to take a look at Bitcoin. Right? And this is why I recommend for anyone to not trade against the higher time frame order flow, because you will get into situations like this where the framework will look good, okay, and a majority of times it's not going to pan out. You're going to get stopped out every time. Well, not every time, but majority of the time, because you're looking to push your edge, looking to push the edge that you have, right? And it's not going to help you long term. It's not going to aid in your trading career, right? Because if you look, we literally have all the pieces here. You have the liquidity raid, the market structure shift, right? Clear draw on liquidity above the marketplace, this gap and this order block, right? Price comes down into the fair value gap. Okay, if we take out this low, these lows are in trouble, right? Rightfully so. This is a great lesson for novice traders, right? When the framework looks so good and the framework is all there, every element of your plan is there except the first thing that should be in your plan, which is what is the higher time frame doing? Where's the draw on liquidity on the monthly, the daily, the weekly, right? Those are the most important things, right? Because you can have the perfect framework on the 1 minute and then get absolutely smashed because your higher time frame draw on liquidity is wrong, right? Or you're trying to chase, you're trying to push your edge, right? And we don't want to try and push our edge, especially going against the higher time frame order flow. I can't stress that enough. I've literally blown up accounts because of going against the higher time frame order flow. Right, so now that we've closed below this gap, right, hypothetically our stop would be below here, roughly like here. So we'll just put this here for stop loss. And then we'll put a hypothetical TP. here. Right, like we didn't show any type of willingness to come into this gap here in this breaker and then move higher. We just slid right through it. Right, so if I was managing a position, if I were actually in the marketplace right now, right, and we close below this gap, I would be potentially trying to cut my risk in half, or I'd be managing my risk. Okay, the odds of our trade panning out are going to go down drastically because we traded through this gap. We didn't come in here, right, to fair value, right? IFTA didn't start picking up orders in here, did they? Right, they just slid right through. Okay, and it looks like our stop loss will get tagged. If we get back above this gap and then come back down into it, then maybe it's a different story, but for right now, it's looking like our hypothetical stop is going to get tagged. Here price goes, it's going to expand lower to the downside, and we're going to get stopped. Boom. And that would be it. All right, guys, so here's the lesson for today. Right, you can have all the components of a model, right? But if your higher time frame bias isn't correct, then it's going to be very, very tough, right? And this is why I do not trade against the higher time frame order flow. Okay, there's absolutely no point in doing so, because situations like this are going to happen. You're going to have the rate on liquidity. You're going to have the market structure shift to the upside. You're going to have the fair value gap in the breaker. You're going to have all these things, but since the higher time frame order flow is wrong, you're going to get crushed. Okay, and in this instance, we would have gotten crushed. Okay, so make sure you guys are always sticking with the higher time frame order flow. You're going to avoid many losses this way. Just be patient, pick your spots, and just get in sync with the higher time frame order flow, because you're going to avoid blowing accounts, taking really bad losses, and getting frustrated too, right? So, well, guys, that's going to be it for this video. I hope you guys enjoyed, and we will see you tomorrow.